Well, hello again, this is Mike Gibbons, and in this short video I want to show you some features of our Breakout Watch charts, and in particular how they relate to or demonstrate the new squeeze metric that we've recently introduced. To do this I want to show a symbol called GTN, and I'm going to look at it over a 9-month time period. Here it is. To make it a little easier to see in the video, I'm going to enlarge the chart size to huge, and I click Update Chart. Okay, there's our huge chart, and I'm also going to show it over 9 months so that we can see the cup with handle formation that this chart or this symbol formed. Here's the cup with handle here. The left side of the cup was back in July, and we see the stock fell into a base and then started to move up the right side of its cup, eventually forming a pivot here of $9.34. It fell into a fairly classic looking handle here, where it first of all dipped and then started to rise up the right hand side of the handle. And then here was the breakout day where we see it moved up quite substantially, and then it started to take off until recently in January, when the market started to collapse and people started to take profits. Now, if you haven't seen our charts before, let me just show you a couple of features quickly. Along this line here we show the date on which the chart was produced, the open, high, low, close values, the relative strength rank, industry rank, the 50 DMA value and the 200 DMA value. Though the 50 DMA line is shown on the chart with this black line, and the 200 DMA chart with this blue line. Now, one of the things we can do with our charts is we can add a couple of channels. In fact, 2 channels. The first one I'm going to add is the Bollinger Band. I don't propose to say much about the Bollinger Band because you can research that on your own, but basically what the Bollinger Band shows us is how the volatility of the stock is varying. So when there's periods of low volatility, the bands will be narrow. As volatility increases, the bands get wider. Once again here, the volatility, as you can see, has become much less, and so the bands have narrowed. Big move upwards here, and so volatility increased, and so therefore the bands widened. The other band I want to put on is the Keltner channel, which is similar to the Bollinger Band in that it shows a channel around the mean price of the stock, but it's a considerably narrower channel with much less volatility than the Bollinger Band. Now, the squeeze is formed when the Bollinger Band falls to within the Keltner channel. So the Bollinger Band is the pale blue envelope here, and the Keltner channel is the darker blue envelope in the middle. And you can see in this area here that the Bollinger Band moved inside the Keltner channel. Then that's a point that we call a squeeze. Now, you can see also that it formed the squeeze here. The Bollinger Band is inside the Keltner channel. And look, this happens to correspond to the cup of that cup with handle pattern that I just talked about. Now, we can see the squeeze on the chart by showing our squeeze technical indicator. So I choose squeeze as a technical indicator here. I update the chart again. Let me make the chart a little bit deeper, move it up a bit so we can see more of it. So our squeeze chart is actually a combination of a horizontal line here, which actually shows us when the squeeze is occurring. So here, when the squeeze is what we call on, meaning the Bollinger Band is inside the Keltner channel, we put some black bars on our horizontal line. Here again, the squeeze is on, black bars. Again, the squeeze is on, and again, the squeeze is on. And when we first introduced the squeeze, we introduced it in relation to the cup with handle pattern, and GTN was one of the first stocks that broke out from a cup with handle with a squeeze. The breakout occurs when the squeeze comes off, and the squeeze comes off when the Bollinger Band moves outside the Keltner channel, and it's at that point that we issue the alert. And you'll see that as it broke out here, it went on to make quite a substantial move of, in fact, over 50%, moving from around $10 to over $15. Now, while we're looking for our cup with handle pattern, this is within our algorithms within the system. While we're looking for our cup with handle pattern, we're also looking first of all for stocks that are forming a cup. Because without a cup, then of course we can't have a handle. So one of the first things we look for is stocks with a cup. And as they fall into their base and then start to move out of it again, we track them up the right-hand side of the cup. And with our new squeeze watch list, they go onto the squeeze watch list when they're moving up the right side of the cup and they're in a squeeze. So in this particular situation, the stock, while it was much lower in its base, formed a squeeze. And then we see that it broke out from the squeeze here. Now, we didn't have the squeeze watch list back at that time, but if we had, then we would have been able to pick up on a very, very substantial move. So what the squeeze watch list does is it picks up stocks when they're much lower in their base, and because of that it gives us an opportunity to get a higher return on our investment than if we had waited for it to form a handle and to break out from the handle. So that's the real significance of our new squeeze watch list. It allows us to find stocks much earlier in the base that can give us a very substantial profit. So now you can see why we're quite excited about this new squeeze watch list. Well, thanks for listening. Bye.